Good afternoon. We are the following team to present our business plan for the production of wheat flour for the company Molinos, Especias, and Pinole. Our team is integrated by Daniel Avalos, Karime Garcia, Cesar Barraza, Sebastián Duarte, Christine Rodriguez, and myself, Jose Gonzalez.
Starting on, we have the initial investment, which are the fixed assets. These assets of the company, whether tangible or not, are necessary for the production area, but we have to keep in mind that they are not necessary for the sales area. The following are the machinery, which is the silo, the cleaning machine, the machine to wet the wheat, the planchisti, that together full a 14,700 pesos in all. Now we have the computer equipment, which is the Lenovo, and the multifunctional printer, which is 5,339 pesos and 14,599 pesos. All this together is 75,338 pesos in total. Next we have the deferred assets. These resources go hand by hand with the assets and our payment commitments in the short term. The following are the installation cost, which is 10,000 pesos, and we have the advertising, which is 8,051 with 92 cents, being in total 18,053.92 pesos. Following, we have the working capital. This accounting refers to those economy resources that a company has within its assets. These ones are the following: the sales expenses, which is on 16,237 pesos; the administrative expenses, which is 18,002 pesos, with the sum of 30,240 pesos with 48 cents. Next, we have the accounting receivable, which is the total sales of 494 pesos with 286, being a total amount of 544,378.55 pesos.
And then we have here the production cost. This budget of production cost is divided into four parts, categories. The first one, it is the raw material. It is like the most important, I think, because the raw material is, it refers to what we are going to produce or we are going to use in the production. In this case, the company is going to use the wet. It is in kilograms. We have here the cost and the consumption per month. And we have the totals per year. The company is going to spend 2,512,777.34 Mexican pesos. And then we have the packaging. It is very important because it is what is going to protect the product. We have the company is going to use bags of raffia. We have the units, and we have the cost and the quantity. The quantity is 824 bags, and the total per month, it is more than 19,000 Mexican pesos. The labor is very important because those are the people that is going to be related with the production. We have here the direct labor. We have the miller and the packaging manager. Those are the people that is going to be related with the production. We have the salary, and as a social security, the company is using 20%, and we have the total, it is more than 10,000 Mexican pesos. As an indirect labor, we have the CEO. It is the person that is going to check in that the process are well done. We have the salary, the same social security percentage, and the total is 18,000 Mexican pesos.
Next, we have the administrative expenses. Those are the ones that are not involved neither in the sales expenses nor the production ones. We have the accountant, the administrative manager, and the secretary. Altogether, some 21,000 pesos monthly.
Okay.
Also, we have the other administrative expenses. We have the stationery, the light, and the water, which altogether sum a 6,095.49 pesos monthly.
Okay, moving on to the selling expenses. Those are any expense associated with the selling of a good or making the sale. If we move our table, we will. Here we have for the floor and sales staff salaries. First things first, we have the cashier and the driver, both earning a total of 220 pesos daily, with a weekly cost of 1,100 pesos and a monthly total of 4,400. This will bring our total to 8,800. After loans and social security, that brings, that's another total of 1,760, bringing our grand total to 10,560 pesos. Other selling costs. Okay, so this is important to know that other selling costs may be affected by outside sources. For example, for the company Don Pinole in Jill, they had to adjust to the ongoing circumstances. For example, mouth coverings and antibacterial gel was not purchased before, but now they have to adjust, and it has been added to the new selling costs. Our table shows them by units, then by monthly consumption, then by annual consumption, and then we have the unitary cost, bringing our total of the other selling cost to 265 pesos and 25 cents. After adding those to our floors and sales staff's salaries, we get a grand total of 10,825 pesos and 25 cents. Now the summary of the cost and expenses table. This is the total results of the cost involved in the production of wheat flour. First things first, we have the concept, followed by the monthly amount, the production, raw material, and packaging, direct workforce, indirect workforce, manufacturing indirect expenses, selling expenses, administrative expenses, and financial expenses, all bringing us a grand total to 287,292 and 26 pesos. Then from there, we have our monthly production, our unitary total cost, our unitary sales price, and our monthly cost production, followed by the annual production cost. And then we have our unitary variable cost, a total of 278 pesos and 32 cents. Cash flow. The cash flow refers to the inflows and outflows of cash and the ability to generate cash. Also, this shows the liquidity the assets have obtained during time. In our table here, you will see that it is divided by years. It's a 5-year plan, beginning with the earnings, which involves the sales, the rescue value, and that will give us a total earnings. Then we have the expenses, which are the fixed costs, variable costs, and then we add those up to get a total cost of expenses, followed by the depreciation and amortization of our assets. Then we have the initial investment, which is the fixed assets, deferred assets, and the working capital. As you see in year 0, because it was the beginning, the only investments are the totals of 420,019 pesos and 5 cents. Then the first year, that incremented to a total of 515,459 with 94 cents. The second year, it increased to 927,113 and 80 cents. And the third year, it increased to 1,415,889 and 87 cents. The fourth year, it increased to 1,993,951 and 38 cents. And the fifth year, it concluded to 2,713,360 and 87. Our PRI is of 95,440 and 89 cents with a 1.05 months. Now, debt amortization table. This is actually a form of support for entrepreneurs because the table shows the payment schedule. For example, the table will show the interest total, the repayment date, the repayment debt, and the debt in each period of the remaining balance. Here we have the total capital, the number of payments in years, the interest rate, and then once we go to our table, we begin with the payment number, interest, amortization, the total, and the remaining capital. If we follow our table all the way to the bottom and we see that in year 4, it has the last remaining total of the interest, the last of the amortization that will be taken, the total, and the remaining capital of 0. That is that after the 4th year, your total capital should be paid in full.
Okay, I'll continue by outlining a basic financial statement. Along the way, we are going to break it down into projected, status, results, and general balance. Okay, to move on, I like to highlight that a projected status result is basically the projected income minus the expenses and cost of it. For example, here in the formula, as you can see, projected utility, projected income minus projected expenses and cost. Okay, next. Okay, well, as you can see here in our chart, we are applying this to our case. For example, here, we have to forecast for 5 years. So I'm going to explain just the year one. For example, the sales are going to be 3,954,219. So of this, we are going to take away the production cost. So we are going to be taking away according to each concept until achieve a certain amount of utility per year. So we have to consider all the expenses and the cost, but we also have to consider the expenses caused by the administrative and the administrative expenses by the company. So we have to take away the taxes generated. And this is a general overview of the chart that we are going to be working within a year. Next, please. Okay, well, now we got our general balance. Basically, a general balance is a statement that will tell us how we are doing with the finance. It means that it shows us if we are financially healthy. We have to consider our assets, and we have to consider also our liabilities and our equity as an enterprise. Okay, this is an overall general balance. Basically, we are going to have our asset and our liability. The name by itself will tell us that it has to be a general balance. As you can see here in the total of our assets and in the total of our liabilities plus capital, we got the same value. We got 637,770, and we have also the same amount of these numbers. So basically, it's going to tell us if we are doing okay with our finances.
Okay, the financial projections and the project evaluation. Uh, Next. The net present value of a time of series of cash flows, but this inbound and outbound is defined as the sum of the present value, the PV, of the individual cash flows in the event that all the future cash flows are input and the only way out of the money in cash is the purchase price. The net present value is the present value of project cash flows minus the price purchase, which is it's the PV. The result of the NPV for the company is the result of the subtraction of the total income minus the total expenses, that is 50,101,352.69 minus 10,736,534.22. This is equal for 4,477,488.41 Mexican pesos. And this is the result to confirm that the net present value is correct, since the income is greater than the expenses. And next. The internal rate return is the rate of interest or return that offers the investment. It is the percentage of profit or loss that will be as an investment for quantities that have not withdrawn from this project. The company Molinos, Especias, and Pinole has 178.32 percentage of internal rate of return, which is the limit of the percentage that a profitable company presents. Is the calculation will based on the initial investment and they accompanied by a series of positive cash flows.
As my partner mentioned, the company acquired a loan from Santander Bank with the amount of 88,352 pesos with an interest rate of 12%. The income The revenue budget is projected for 5 years. The product sales, the unit price is 399.1, and the average number of bags that the company has to sell is 800 to 24 for more than the year, the uptime full year. In addition, there is a profit margin of 14.7%. Next, please. The break-even point. The break-even point means the percentage of sales that must be performed per year to not miss. It to say it is the minimum value in sales that must be performed to not lose over those value, meaning good profits. The first year, the sales has to be 3,954,290 pesos. The percentage has to be 58%, and the company is going to break even. The second year it has to be the 44%, the third year the 35%, the fourth year the 29%, and the last year has to be 24%. The cost benefit analysis is a financial tool that measures the relationship between the cost and benefits associated with an investment project in order to assess their profitability. Being understood that investment not just as the creation of a new business project, but also as in investments that can be made in a business underway, such as a development of a new product of the acquisition of new machinery. This amount is obtained by driving the total income between in total expenses of the company. The result that throws must never be less than 1. If the result is less than 1, the company or business is not profitable. Our company has a 1.41 of cost benefit, a forward result that shows that the company is profitable.
And then as a financial plan, the money is a very important point, talking about business, sales, income, and investment. And the investment, it is important because it depends if the company is going to finance a project or they are going to need a loan from a bank. In this case, the company is going to need a loan because they need to buy machinery and equipment and to spend money in publicity immediately to start the project. The company is going to use a loan from Santander with the 12% of rate. Some of the characteristic of the bank is the amount. They can give you a loan from 250,000 to 8 million of pesos with a term of 4 years, with the guarantees that you need at least a solidarity obligation and the rate of 12%. If you want to hire a loan, those are the requirements. You need the credit request field, the constitutive act of the company, the power of legal representative, the proof of income, you need your accounting there, and the tax identification card, or here in Mexico, your RFC. And those are this is the chart of the loan. As you can see, we have the investment that the company is asking for the bank, the interest rate, the years, and you can see it is for 4 years. We have the interest and the debt after the payment. As you can see in the in the year 4, the amount is going to be 0.
Okay, well, in conclusion, we can say that there is a lot that has to be studied and learned in order to properly handle the finances of a company. It is important to take into consideration the cash flow of things because it gives you a great great visual of how well your company is doing, you know, and it will help you decide if there's things that need to change, or things that you need to better, or things that you might cut out. Another thing, if you notice the break-even point, it decreased extremely as the history of the company went further. With more years, there was a percentage of break-even less because they were generating more money, so there weren't as many expenses as the year 0 when with the beginning investment was made. Thank you.